Thanks everyone for joining. Let's get started here. Let's look at the market this week. See what the old Dow Jones is doing. So began the week pretty good on Monday. Tuesday was down, Wednesday sideways, Thursday was down big and got a bounce yesterday. But this has been brutal. So you look at kind of where we were going back to, looks like we hit a high around September 2nd and just been in a pullback since then. So the quarter has ended September 30th, end of the quarter. So I don't know if it's, we're going to turn around this coming week and kind of go sideways to up. But September, I think, historically is like the worst trading month of the year. And it may even bleed some in October. So until we get some definite direction, still going to be. Let me pull up, show y'all this longer term chart here on the SPY. So SPY is Standard & Poor's. It's one of the bigger benchmarks that people look at. So you see here we were in this huge uptrend. So let me go back to the week first before I get that. So again, this kind of looks like that Dow chart. Up Monday, down Tuesday, Wednesday, Thursday. Got a rebound yesterday. And let me just do the Russell and the NASDAQ before I go back to that. So you can see here again, Monday, Tuesday, Wednesday, Thursday. So all of these indexes kind of following the same. And then so that's the NASDAQ tech related stocks. Look at the Russells before I go back to again, Monday down, Tuesday, Wednesday, Thursday, rebound yesterday. So you can see all of these. So your stocks probably were all down for the week because all the indexes are down. So now let's go back to the S&P. So if you look here at this chart, go to a weekly. So I'm just going to show this. So you can see that we've been in this long-term uptrend, right? But you see we actually broke this uptrend, and this is a weekly. So this goes back to November of 2020. And so we're coming up on a year, but we actually just broke up below this trend line here. And so to me, this is really interesting. Again, in the context of the September, October pullbacks. So I want to see if we can actually hold here because we have this horizontal support of 436. So it's going to be really interesting to see again what happens. Again, that's a weekly. Let's look at the daily. Same chart, but on a daily. Let's see. Let's expand this. Try to tighten it up so you can see we broke significantly lower here. Now, one of the things people also use is, we've talked about this a little bit before, are these moving averages. Let me chart. Let's see, SPY. Let's look at the SPX. Yeah, same chart, just a different ticker, but I didn't want to have that trend line on there. So really want to talk about these moving averages. So the red is a 8-day, the green is a 21. So you can see here, 8, 21, 50, 80, and 200. The significant ones are the 50 and the 200, right? So that would be the green and the blue. So you can see here, we broke below the green and actually got down blue, purple, whatever that is. Got to this bluish purple here, and you actually see we're under the 200-day. This is significant when you get below the 200-day. So we're gonna need to close back above this 200-day moving average, just because a lot of big money funds, mutual funds, pension funds, ETFs and stuff, they look at this 200-day moving average on particularly on the S&P, because the S&P is 500 stocks, and this is what money managers and stuff are judged against. It's like, how well did you perform against the S&P, because the S&P is again symbolic of the overall market. So this 43.89 level is really interesting. So but we can see that we're going sideways. So if we can maintain this sideways action here, that will be good. But let's just say it doesn't. So if I go back to my other chart to show the go back to the SPY, I want to show the horizontal support now. So you can see here we need to close back above this 436, at least go sideways here for that level of support. And again, if we get there, we're within range of that 200-day, which is this purple here, right at 437. But ideally, we want to get back above, this 446, such that this trend can be intact. Because if not, this here could prove problematic if we don't this area. If so, really, so we go sideways here. First area we need to clear resistance 436, and then back above this trend line, so the trend can be intact. If not, this trend that's just starting. So if I take this here and extend this down, if this new trend becomes predominant here on this breakdown, then we start looking at this 421 or this 404. So it's going to be interesting, I would say, next couple of weeks to kind of see what happens here. And again, the reason for this larger focus is because if the overall market is going down, it's gonna, it's probably a pretty high correlation that the stocks that you own are gonna retreat with it. And then this, again, the SPY kind of covers a broad intersection from, the Dow, the NASDAQ, as well as the Russell. So just wanted to bring that up. So given that, how have you all been kind of playing this pullback from September 2nd? What have you been doing with your portfolios?
For me, I've just been playing it safe, so not really having more cash than like investing right now. Mm-hmm. So just if I'm in something and I'm just seeing that it's down right now, mm-hmm. and just went in there a little bit just to see where it's going to go from going forward. But it's not much in there right now I'm playing in.
Okay. Anybody else?
I've been kind of just hanging tight, just kind of watching it.
Okay. Good stuff. Brent?
Yeah, sort of what I mentioned last week. I've been scraping off my weaker children, and then switched over to like shorter term and smaller trades. So if there's even just a little pop up, then I'll do quick short term trades as opposed to anything longer.
Okay. Now let's so there's only really three scenarios in this case, right? Either we go sideways, we continue to trend lower, or reverse and go higher. So let's assume that we go lower. So let's just say if we extend that there, let's just say that this trend line continues and we break down to this 421 or even this 404. So if that is what ends up playing out, the question is, in your watch list, what stocks and stuff are you looking at and saying, hey, these are stocks that I'm following, and if it gets down to a certain level, I'm interested in buying at that point. So are you preparing yourselves just in case if things continue to get worse? And are there some stocks that you're looking at to pick up cheaper than what they are today? Okay, I'll take that as a no. So I'll show you all one that I recently got in. And I talked to you all about it before. So this is my Fubo, right? So I'm a buyer. I bought Fubo at 25. And you can see here we broke below that 25 and got down to this 23. But we got to bounce the last couple of days. But, you know, it followed pretty much what the overall other indices were doing. Down for the week, got a bounce. So their bounce started a little bit early, started Thursday as opposed to yesterday. So this is definitely one that I like the price point on. Another one that I looked at was ADSK. This is Autodesk. So the CAD software company. It's a pretty big company actually. They sell a lot of software. But you can see here, this I had bought it and sold it. I think I was in at 280. You can see we got back down to this 280 point, and then it bounced on Friday. So this is another one, and so I like this 280 level because I traded it once before. I think I sold at 287, something around in there. And so definitely looking back at this 280. I may have missed it, not getting back into it yesterday, but still, I'm still waiting for that overall narrative of trying to figure out what's going to happen in the next few weeks. But getting back to some interesting levels that I like. So if it definitely gets back here, this 270 something, 273, I definitely want to try to remember to pick up some. So those are just two examples.
Hey, Mike, I got a question.
Yes, sir.
And I know there's a lot of variables in this, but like when you purchase at a certain level, like when do you decide to take profit? What really gauges that for you?
I'll give you a good example here. So in this one, I have been tracking this stock for some time, right? And so I was looking for entry point. So I think when I got back, so let me draw these out. So I saw this huge run up, and I was like, man, I missed it. So this is what I was looking at. I was like, I missed this run. I didn't get any of this. But when it had this pullback and it got back down, so this is my point of reference was this 280 to 284. And so when it got back here, I got some, right? So in this case, this is not I haven't been playing the stock for a long-term hold. So I was planning for a trade. And so to answer your question directly is when I was in at the 280 something, I think I had 50 shares of this. And I was like, you know what? I think I was up $400 or $500 or whatever. I think it was a little bit more than that actually. And I looked at my portfolio and I was like, you know what? We're in September. We can get a pullback. You know, the stock has run pretty good off to 28. And I think I was up maybe 10 points. I said, I'm not giving all that 10 points back. So I put a stop loss in, I think it was like, and it was in this area, like 295. And I said, you know what? I'm going to put a $6 trailing stop. So what that means is that, so if you take $6 from the 293, we'll just make the math easy. Our trailing stop was set at 287. And if the stock continues to go higher, it'll just trail the stock up by that $6 offset. But as it goes up, as far as it goes, so let's say it got to a high of say 300, right? With that $6 offset, then the lower price on the offset then will be the 394. And so if it came back and hit 394, it'll get me out at that level. So I think I end up getting stopped out of that stock at 387, I believe. and I just took the profits on that. So for me, it ran up. I had a decent profit in it. I didn't want to give back, $700-800. I was like, hey, I'm gonna capture some of this, and I sold. So that's the answer for that one as a particular instance. Now, for instance, let me give you another one that I'm playing, and I haven't sold much of this at all. Where is it? In India. Now this is a long-term hold for me. So for a trade, that's sometimes I look to a price point. If it gets there and it meets it, I'll set a stop and try to get some out. And typically what I'll do is I'll set two different strikes. Two different price points. I'll set one at an area. So let's just say here, I'll just use this for example. Say I was in this stock and I was up, so it was up $1, and I was up in this area. I may set a stop loss here at 390. I'm sorry, at 639, and then may set another one, say around this 622. And so the price points really doesn't make that much difference. That's just where it relates to this chart. But the point was, usually I try not to get out all at once. I usually try to set two different points, because sometimes you can sell too early and the stock still has more run in it. And so I try to give myself some upside where I'll take half the position off and then set another stop a little bit lower, or set a trailing stop. And so last week we were talking about Chewy, right? Remember I told you all that. I said I really needed to set. This is one where I didn't set the stop, and it came down, and I said, you know what? I'm gonna go ahead and set this thing. So we talked through it, and I did set a stop. So I set a stop, I think at 68, and I think I set the first one at 68, and I think another one at 67.50. Again, because it could have hit that 68 and turned around and rebounded and went up, and then I would at least have the second half of the position to recover in. But in this case, it went below the 68 and a 67.5. So I got stopped out of both pieces. But as you can see here, it continued this trend down. So actually putting that stop in has saved me some money. So again, if you're looking, long term, you got to put some downside protection. If not, I didn't trade this one right. Number one, I violated I should have waited, because I was trying to wait until we got out of September. And if I'd have followed my first mind on this, I would have gotten a much better entry point. And then in other cases, so I was going back to that in NDM. I know it's a long answer to your question, Sharif, but in this case, this is a stock I'm holding long term. I believe in this stock, because I think what they're doing is going to be pretty revolutionary. And so I've just been buying. I've been buying even lower. So I picked up some more shares down in this 580, 570 range. But it's been trading, you can see here from 530 to 9, back down to 530. Should I have sold some out here at 9? Yes, I should have, in hindsight. But again, this is a long-term hold. So with this one, I feel comfortable with this, where I am. My line in the sand here is 539, say to 520. So I feel pretty good here. Because again, I know I want to hold this for the long term. So in this one, I really don't have a lower sell price unless it just really breaks down, below 5. And then I'll have a decision to make there. Otherwise, again, I'm just still trying to load it. Now, what I may do is I bought a little small position added to it here. I may take that, and if I get back up to the 630, I may sell that little piece, and then if it comes back down, just buy that and just try to range trade it. So again, short-term scenario, which was on that ADSK, I sold because of dollar amount. On that Chewy, I didn't put it in fast enough, and where I should have had a stop loss in earlier, so I lost some on that. And then in this case, I'm really just adding to it, and I may sell a portion of it and just trade this range from 638 to 539. So hopefully those were three scenarios that helped with that question.
Yeah, it does. I appreciate that.
Yes, sir. Yes, sir. Anybody else? All right, let's see here then. Let's go to our list. So, Brand, let's look at your Facebook. Yeah, so you can see here Facebook is still continuing this trend down. Keep it. Change my tool. So if I just continue this trend lower, keep the same slope. So just again, with this overall market, just really looking to see what's going to happen in the next couple of weeks. So what do you think about this, Brand, on this Facebook?
Yeah, pretty much what you said, especially I've been watching like those interest rates just to see which direction they're going to keep going, since these tech stocks are pretty sensitive to those higher interest rates. But it did have come down from the 1.5 to the 1.14s the other day. So like you're saying, just kind of watching right now.
Okay. And I think you had another stock in here. Yeah, ATVI. You still have that?
Yeah, actually.
Okay. It's an Activision.
Mm-hmm. Okay. I think in my personal, I actually just increased my holdings on it because I'm hoping it's did a nice little bottom out there.
Okay. Right. Oh, right here.
Yeah, and I actually yeah.
Okay. Yeah, actually, that's a good area. So, because you can see here, if you go back to this November 20th of last year, that was definitely a bounce in that area. Let's go and pull it back a little bit more. See what we got. Got another area where you got some congestion in that 72. So yeah, that looks like a good point. Good. So did you pick up any here at the 72?
Yeah, exactly. Yeah. So this week I actually did. I picked up some more.
Actually, that's pretty good because you can see here. Let me pull this back a little bit. So just look at that. So in this case, this is actually really good. Here you can see this trend line down. Now you could say that, okay, so she used the support area from those previous points we just plotted to start her entry. But if you were just trading this particularly on a trend, you can just say, hey, that downtrend is over because we got to close above the trend line, right? So now, even though you got to jump on it by starting earlier, for others, if you were just riding a trend line down, this is how you can use these trend lines in your favor, to where you just wait until you get confirmation that downtrend is over and it's trying to start a new trend. Now, could you still be a little bit early because it's just strictly on this trend line? Could you be a little bit early because you don't have as many closes above the trend line? So you could be a little bit riskier here if you were trading this trend line and see it go sideways. Now, so that's just on that trend line. Anything else you want to add to that, Brand?
No, that was basically my thinking. I was like, yeah, I'm gonna increase a little bit there. Okay. But another one I'm looking at is that DraftKings I mentioned last week. So
okay, let's see that. Actually, I'm glad you brought DraftKings because I want to share some with you all before we get off. What is DKNG?
DKNG, yeah.
DKNG. I always get it wrong. We want to put an R in there somewhere. Yeah, kind of same with this DraftKings. Just look quickly. 1, 2, 3. When you see this, you want to look at this 43 level for sure, right? Mm-hmm. Also, that's a trend. It was up. The trend got breaking down, and so now you can almost even say a little mini, even within this higher 43 to 50 about here. You can almost say that kind of where it is. It's probably halfway. So if you wanted to draw that, that would be acceptable. And so again, you come down here. We got the bounce from Thursday. Friday was a better day. What's your prognosis on this? What are you trying to do here on this DraftKings? It's short term, long term. What's your?
He's usually my short. I usually play with him for short term.
Okay, this short term. Okay. So did you pick up any of this, or are you just looking at it for now?
I had to go back and check, so I don't know if I did or if I'm just watching to see if which way he's gonna go. I think I added both of those two this week.
Okay, good. All right, thank you, Brandon. All right, let's see. I think we had. I know we got Christian. Let's check out that hood. All right. Same thing with hood. Actually, just a couple weeks ago, got a nice little bouncer. Oh, right.
Yeah, we did.
Let's see. Let me pull it up. Sorry about that. Sure. Sorry about that. Okay, go ahead. Tell me about this chart, Christian.
Yeah, so it was still on a little downtrend a little bit the other week, but it pointed out that it looks like it's trying to stay at not go lower than that 39 range price point, and it bounced back up a little bit early in the week, it looks like. And then it's just going a little sideways the rest of the week, but it still didn't go past below the 39 range.
Yeah, did you add any to this position or no?
No, just holding right now.
Just holding. Okay.
Just holding just to see where it's gonna go, because I want to see if it's gonna go. If it breaks below the 40, and then I might add around there, or just add like right around the 39 range, and then see if it's gonna go up and keep just going that sideways basically.
Okay. Good. Actually, there's another stock you told me about. I've been following it, and I never had bought any of this thing, but this thing is.
Yeah.
Did you get any of these?
I got a little bit of it. I didn't. That one. That's one of the ones I kind of went ahead and went cash for right now.
Oh wow, this thing has been killing.
Yeah.
I don't know if anybody else has put this ticker in your watch list, guys. BCPC, it's a chemical company, I think it is. I think that's when we looked at it. Let's see. I'll say they do chemical stuff. Yeah. Specialty performance ingredients products. Oh no, it's not a chemical company. This operates the following segments: human nutrition, health, animal nutrition, specialty products, industrial products. The human and health segment supplies ingredients for the food and beverage industry, providing customized solutions in powder, solid, and liquid flavor delivery. Right, flavory. That was terrible. Flavor delivery systems. Spray dried, emulsified powder. Okay, I don't know why I thought this was a chemical company. Okay, it's more food for the animal health and human. Okay.
It says it's in the chemical industry though.
I did miss that. Yeah, I don't know why they call that chemicals, but I'm looking at what they do is more food related products. But I guess it is base level chemical stuff though. Okay. But yeah. Okay, I guess they are. So so they got specialty product segment and an industrial product segment. Okay. Then a shell space too, with like hydraulic fracking and all that stuff. It's interesting. But this stock has been going crazy. I mean, so we go back here to September of last year, and it's just been straight up. Well, not straight up, but gradually up. Definitely following this trend line. I slipped on this one. I should have got some of this. But yeah, and so I'll give you all a point. So I think Well, you know what? Let me just make a note of myself, so I don't want to deviate too much. We're gonna get back through this. Now, let's see. I'm trying to. There's a way you can put a note in here. Okay. Come back to. Man, that's what happened when you get old. I was trying to pull up the section for the note, and I forgot what the note was. Man, oh well, it'll come back. Find that. Okay, I can't even pull it back up. Oh well, it'll come back. All right, thanks, Christian on Hood. Let's see, Sharif, you had MN, MGNI, Magnite. Let's see what Magnite is doing. Nope. All right, thanks. Okay, Magnite's funny as Magnite look like that darn Hood chart. So, talk to me about this Magnite.
It's just been on a steady decline.
Hey, yeah, I can hear it all in your voice, man. But it's still in range. It's still in range. So if you look at this range wise, actually the purple. If I just extend this purple, it's been obeying that pretty well. I mean, buy at the 24, sell at the 32. Could have got 2 or 3 points out of there. Now, have you been following your ranges on this or no?
And I guess like when I got this was a long term hold for me.
Okay.
And I'm on this phone and my chart just disappeared.
No, that's fine. That's fine.
Oh, but when I entered, it was I think I was like around 46.
Okay.
When I entered, and so for me it's like, okay, this is going the complete wrong direction.
Mm-hmm. Okay. Yeah. So you've broken down. So I'll just say it. I know you said your phone went dead. So you had a support at 41. It broke through support at 37.
My chart came back up. I can see.
Oh, okay. Yeah. So but yeah, I think though in this area, as long as it's 24 is like the lower level support. You right here, just a little bit below this 28. Let me ask you this: have you added any to your position here, or you cool with what you?
No, I did. I added some around the 28 mark.
Okay. I think 28 is good, definitely for this second level. Now, could it break a little lower and go 24? It's possible. Now, one thing I would say that's been pretty good. If you look at where we were looking at the S&P chart, so if we go back to September 2nd, so September 2nd, yeah, so right here. So you're not that much lower than the highs of the overall market, because the overall market was much higher on September 2nd to where it is today. Whereas when you look at this in comparison, you're really not that far off. You're only 10% off from the September 2nd highs. So I think this thing is definitely found some footing, in this 24 to 28 area. So yeah, I think that'll hold. And then one of the other things you got to think about too is holiday season is coming up, and you should get a bump in advertising because of all of the shopping and online shopping and that stuff. So they're going to be selling a lot of advertising. These companies going to be trying to get their products out for Christmas and Thanksgiving, as well as I hate to even say it, but Halloween is a pretty big deal in terms of products and services that are sold. So that may bode well for the advertising space that Magnite operates in. So I think let's see something to that. Let's go out a bit. Let's see what October? Let's look October last year. So yeah, so it looks like we bottomed out September last year. And now this is a monster run. So that was a bunch of other stuff, but September to October seemed pretty good. Let's go back to a previous September, October. So this is September here. October was kind of down, but you can definitely see here from December. So you got this bump right here for Christmas. Got a decent bump. Then it fell out of bed after January, February. See another one. September, October, September. Got a little bump. Came down. So I don't know. I think, I like this. I like this price area. And then too, with all this cord cutting that's in play, that bodes well too for MGNI, because a lot of they service a lot of the ad space for cord cutting streaming services. So like today, if you got cable, and all your advertising come to the cable network, but when you cord cut and you go to a Netflix or a Fubo or Apple TV or a Paramount, Peacock or Hulu, they also have advertising as well, but they don't have advertising the same way through a cable channel. They advertise through one of these media platforms, and Magnite services a lot of that. So I think long term, this is definitely a good area. Let's see. Did you have something else, Sharif, in your? Let's see if you had another stock that you were tracking. Man, I think that was it.
I think that was the only one.
Okay, cool. Thanks, sir. All right, let's see. Milton, let's go to your favorite. I actually looked at your stock this week, Milton. I was like, Milt probably ain't too happy this week on his stock. Let's look at his PLTR. All right, Milt, you want to talk to me about this PLTR?
Well, believe it or not, I am quite happy.
Oh, really? All right.
The reason why is because of the different option plays I had on this.
Okay.
So I restarted the wheel basically because remember, I don't know if you remember last week, I didn't believe this breakout.
Okay.
So I sold everything except for my investment piece in there, which I would never sell.
Okay, gotcha.
And then I have been doing covered calls all the way down. Okay. And I may have gotten myself in trouble because I have a 25 for next week.
Okay.
As you see the price right now, it looks like I may have to be rolling up, or it may take my investment piece, and I can't allow that. So I may have to eat some money for real.
Okay.
To me,
so what was your strike on your cover call?
It's a 25 next week.
Okay. Oh, okay. That was a strike. 25. Okay.
Mm-hmm.
Well, but if it's covered on the 25, you'll just keep the premium though on that, right?
I don't want the premium. I want
Say again.
Stock.
Oh,
I don't want the premium.
Oh, you sold. Okay, gotcha.
So I got to roll out and up.
Gotcha.
But right now, I'm just seeing, because as you can see, it's down there. I started to buy down here to 24. Last week, I said, well, the last time we met, I said I was going to, if it get down to 24, I was going to buy some more.
Yes, sir.
Of course, I lied to myself.
Well, so was that just more of you meant to buy some and you didn't, or you got down there and you chickened out?
It's more like I saw Wells Fargo take a dump. I went, wow. And I went and bought over there.
Oh, okay. Gotcha.
So now I got a small profit in Wells Fargo, and I got to see, should I sell Wells and buy down here like I said I was? Or should I ride Wells through earnings and see what happens? Because of all the big money banks, that's the crooked one. So their stock has been depressed forever because they're crooks.
Okay.
And they took a dump because they got fined. But they only got fined $a few million. I went, that's not even a fine for a bank like this. So that's when I bought.
So yeah,
you see that big dump down there?
This dump here?
No, not that far back. This week.
Dump.
There we go. That one is where I bought it.
Okay, gotcha.
And no, I didn't get down there. What did?
I don't know if this was it wasn't the earnings. I'm not sure they got killed on right
Oh,
here though.
remember I told you they got fined.
Yes, they got fined.
This is a cricket bank. If there is such a thing as a cricket bank, this is it. They have been getting fined forever and a day.
That's funny. That's who I bank with.
Ooh, they've been getting hammered in the news.
Oh yeah, I see.
Oh, these guys are so criminal. But they have management now that at least I don't know how good they are, but they're not crooks. So that's what I'm betting on.
Okay. Gotcha. So you're just basically using the PLTR money to play this and just trying to figure out if this is a better play.
Yeah, I'm not going to take much of a loss on this. I got a small game right now, and I'm looking. Earnings is going to be next week, and I hate following things to earnings, so I may let this go Tuesday or Wednesday, depending on how it acts.
Okay. Good. Let me see something. Actually, this thing has been on a run going back to November of last year. Then it kind of peaked out. So if we look at this trend off of this low, let's say up here. And then
this going back to what Brenda said. This is also more of let's see what interest rates do.
Yeah,
I was wondering about that with the banks as well. If that's a good offset for tech stuff to start looking at. Well, like Goldman Sachs and some of those other banks. I hadn't thought about the Wells Fargo because of what I'd heard about that. Like you said, it being crooked before, but I was wondering about the banks overall, just as an offset for the direction of those interest rates. Yeah.
Let's get to this last one. We'll come back on that bank conversation. Let's see. CC, what's up, man? Let's see. What's stock CC? Hey, he told me to change out to something yesterday, and I mean not yesterday, but last week, but I forgot. But you had this SPWR Curtis and Solar Edge. Can you hear me? Maybe he's just in listen mode. All right, we'll just look at the Solar Edge. So this block, it's still kind of coming down, getting down to the support area. That's was the SPWR. That's Sun Power. Now this one is definitely been in this downtrend, but kind of going sideways since August. But right here, and I don't know if something happened yesterday for sure. Like this big volume bar and this huge move. I don't know what that was about. So it's probably something I'm tracking the news to figure out, because this volume has been the highest it's been going back to February when it was at much higher prices. So I'm not sure what happened here in the Sun Power, but some big news yesterday, because you can tell this volume is roughly 2.5 times what it normally is. So it's interesting. But if anybody played this at the 21, you're up 10%, a little bit more than 10% now. What is that? 10, 12%, 12, let's see. Oh, 18% if you got in it below the 21. Okay. All right. So I think we got everybody. Let's go back to that bank discussion. Yeah, I think we covered everybody. So let's go back to that bank discussion we're just having. So let's look at Bank of America, then we'll look at Goldman as well. So in reference to this, you can say this question for interest rates. So you can see here we got a bounce for sure on Bank of America. What is this? The 20th. Let's look at Citigroup. 20th here. Don't know what was, and I don't know if this was related to the FOMC meeting, the where they have the I think it's a financial, basically the Feds, and they go in and they talk about they have their minutes and they make a decision upon if they're gonna change the interest rates. So I don't know if this is what this was here, and the news came out because it's the same area. So that was Citi, Bank of America, Wells. Who else is in that space? Let me say Goldman. Let's see. 21st. Yeah, so some definitely happened at the 21st. I don't know what that was. Sorry about that. But yeah, so
You can add Morgan Stanley in that MS in that group too. That's another one I follow.
okay. Let's see that 21st. Yeah. This 21st area. So actually, of those that we looked at, Morgan Stanley and Goldman are close back to that 24 low, versus those, I think, first 3 or 4 banks that we looked at are not. So you can see this is close, that Morgan Stanley was there. But where if you look at the Bank of America, they're much higher than that, whatever that was on the 20th, 21st, versus, let's see how Wells fit in there on that 21st. Yeah, even them, right? So what is it? No, 20 was it 21st? Yeah, 21st is right here. 20th, 21st. So they're up. Whereas those Goldman and Morgan, they were not up so much. They're actually back toward their lows. So, but I think overall, definitely seeing some rotation. Now, and this happens as well, is that, you know, you have industries and they rotate out of. So let me see if I can find my industry list. So like you had these sectors. I forget what the banking sector is. There might be banks here. Those home builders. Maybe this is it. No. Here it is. It's a banking index. So you can see sometimes that and you can see the overall. So this is an ETF for the banking index. I have to look at it to figure out all the components, but more often than not, those 5 or 6 that we just covered, and you can just see here that 20th area. I don't know what happened here, but again, I think that's probably FMOC meeting, and it's been up there. So yeah, I think interest rates is definitely going to be a thing. Who's going to do well, and definitely banks, and not just banks. So you can think also insurance companies, they're going to do well too. So like, let's see, a Prudential. So anything that makes that relies upon fixed interest rates kind of stuff. So insurance companies do well. So you can see here the same 20th got a bounce there. What's another bank? New York. What is it? MetLife. Let's see, MetLife, another insurance company. See that 21st. Yep. So these financials definitely will benefit. So it looks like there might be a rotation into financials. Again, looking at that bank index ETF. And for some of you that want to play this and you don't want to play an individual name, you can just buy this banking index, BKX ETF. So maybe one way to play it if that's something you want to get into. Any other feedback on this bank stuff or financials in general? Okay, take silences. No. Let's see. And there was so let me share some with y'all. Now, for those of you that want to, so if you have smaller accounts and you say, or you just want to play it as a thing. So a buddy of mine, he has recently come up with this. So like Brenda mentioned DraftKings earlier, where it's a, fantasy, their thing is fantasy sports. So he's created a site called Trade Champs, and this is basically fantasy stocks. So you can come in, you can pick a portfolio. So like, say for instance, if I want to enter this contest. Right now, there's no entry fees because it's just trying to grow the membership. But it's tradechamps.io. And if you go in here and sign up, I'll send you something. But the way you play this, say if I want to enter now, I go in and I say create my contest entry. So let's say has no entry fee, just confirm entry. Thank you. Portfolio entered. Now I go to my assets. So this is where you can just pick your portfolio. So let's just say we were just talking about the banks. Say my thesis is for say Monday that I believe that the banks are gonna continue to do well. So let's just add a few. So we said so Goldman and Morgan Stanley wasn't doing that well, but Bank of America was. So we put in Bank of America. So for whatever reason, he don't have Bank of America on there, so we need to add that one. What was the other one? Citigroup. Where is this? Okay, everyone I want to add is down here, so you might not have many banks here. I'm gonna ask him to add those. Let's see. Well, you get the idea. Let's just add some tech stocks. I know some techs in here. So let's just say Apple. APL. Okay. Did I? Hold on 1 second. Let me make sure I didn't click crypto because the only thing is coming up. Okay, that's why. So in this case, since this is, I know why now. So in here, the next contest it's a daily contest. So the market is closed on a weekend. So that's why it's not giving me any of the stock entries. But the way you would go through Monday through Friday, you can create that. But since this is a weekend, Saturday, Sunday, the stock markets are closed, but the crypto markets are open. So I'll just do crypto for this. So let's just say I'm gonna buy some Cardano. So you have $100,000 account, right? Fictitious $100,000 account, and then you can divide this up. So let's just say I'm gonna do 4. So I'll just say 25,000 a piece. All right, and you can either go long or go short. And again, if it was Monday through Friday, I can get my stock entries in here, right? So I'm saying I'm gonna do 25 or Cardano. I'm at say some Ethereum, and actually crypto is actually going up a little bit last few days. So I'm gonna do 25,000 Ethereum. I'm gonna go long on that. Let's see what else. Another crypto. Let's see, Bitcoin. 25,000 on that. And then lastly, let's see. Trying to think of another one that. Let's try Litecoin. Yeah, let's be creative. Let's try some Dogecoin here. All right. Okay. So Doge. All right. So in this portfolio, I've chosen. Now you can pick one or more. You don't have to pick any other. And so you can go long or you can go short. So I'm gonna just go long all 4 of these. But if I wanted to short because I think they were going down, I can do that as well. So in here, I have a portfolio of this. I entered the next contest, which is today. And so now if I go back, so I guess it's edit to entry. So it's October 3rd. So is that tomorrow? Yeah, I think today's contest already started. So that's for tomorrow. So I entered contest start. I don't have to edit the entry. And so what happens is that, so and I don't know what the weekend contests are on crypto, but during the week, what will happen is it starts at 9:30, the same market hours from 9:30 to 4:30. You have your contest in by 9:15 of that day. So I guess it's even on the weekends, 9:15, and it runs. And then by 4 o'clock, you'll see that it ends. And so if you look at some of these contests before, it's paying out $100 for this. And so right now, let's say contest fees are free, I think until October 8th, but it's $100 prize. So if you're interested, just go out here to Trade Champ, sign up. And if you sign up, just send me your name and I can check it here in the members piece. And if you do, I'll send you an NFT or something. So, but yeah, so give that a check out. Appreciate it. So back over here. Let's see. Trying to think if there's anything. Let's see if anybody else joined I need to cover. Okay. No, that's pretty much it. There was something else that we were talking about that I wanted to say. Oh, let's look at this water thing. I know Vanessa's not on, but she was playing this water company, and they've been getting killed since this September 3rd. So you can see here that they broke through both of these trend lines that it was on here. Let's go this weekly. So this thing had been doing extremely well, but these last 4 weeks is definitely a downturn. And so if it gets back to this 51 area, it's going to be interesting to see what it there. And this is just on a weekly. If you look at that on a daily, you can see it's still just trending now, but it was on a really good run off of this 46 to almost 60. So all right, let's see, what's something else I wanted to say to you all before we left.
Go to the airlines. Go to Dow.
Okay.
He's still holding up.
All right. Yeah, we actually talked about these last week.
Mm-hmm.
So yeah, actually, this is, considering we had a bad week in the market, it's actually up for the week, which is good. So there's definitely some strength here. So that one was it American. Let's see if they pulled back in the week, but they bounced back on Friday. Let's check Love, Southwest Airlines. Actually, same thing. This week was brutal, but they pulled back and went higher. This is a nice bounce for Southwest Airlines off of this 48. So it's at 6 over 48. So it's about a 15% move. It's pretty good. Let's see what's the other Spirit. Save. Yeah. So all these airlines, so you can see, so between banks and airlines, you can definitely see that there's a rotation into both of these stocks, in both of these groups of stocks, that they're both rebounding and doing well. So now, as a corollary to that is, let's see what the oil stocks are doing. Trying to think is
MRO is Marathon.
Yeah, MRO.
MRO is Marathon.
Thank you.
Mm-hmm.
I went blank there. Yep. So look, so you can definitely see that there's a correlation. So if the airlines do well, you can always go and look at the oil as well, because a big component of their cost is fuel. So this looks good, and actually this is actually a good bounce off of this. You see this 1170 to $11 to $11.70, and you got a nice move off of this. And it looks like, again, whatever happened here, and again, maybe this was just interest rates. Now, how interest rates, if this interest rates related, I'm assuming it is based upon what we saw with the bank stocks. How it relates to oil, I have no idea. But you can see some correlation there with that. And so this is following the same pattern that the airline stocks did. So, and particularly here for this Marathon, we're getting up to this resistance point at 1430. And actually, I was just about to say, I know that's not an all-time high. Let's see. Yeah, so you break this 1430, you're probably good up here to this 18. And if it goes crazy, 23 is the next, and probably 21, and then on up to 23. So this is interesting. Off of these October lows of last year, let's see. it was just pretty much sideways until you got this breakout. So actually, this break above this 1433 is going to be real interesting to see if it holds. Because if not, you may just go sideways here. But compare the oil with the airlines. I'm trying to think of another oil stock. I think the OIH is the.
Try SM2.
Try who?
SM.
SM.
Mhm.
Okay. SM. SM Energy.
That's the one.
Okay, thank you. I hadn't heard of that one, Milt. All right. Okay. Again. Okay. No, this is something happened in August for this stock. It wasn't earnings because earnings happened in July. Let's chart this up real quick. Let's see. Yeah, so you can see definitely off of these lows here. Do you have any of this, Milt?
This is one that I was gonna invest in and I forgot it.
Okay. Do you keep a watch list, Milton?
I do, but my watch list is so long it's almost useless. So
Yeah, I understand. But yeah, so I don't. Again, I wasn't even familiar with this company, SM Energy. Let's look. Let me read a little bit on it because I've never heard of this company before. Have you been following this one for a while, Milton?
I think I started looking at it in February.
Okay.
But it's just like I always found something better to invest in. And it just kept running away from me.
Okay.
And then I was saying on the next dip, I'm going to get this. And of course, I totally missed it.
Got it. Okay, so it's an independent energy company, engages oil acquisition, exploration, development, crude, natural gas liquids in the Midland Basin in South Texas. All right. Headquartered in Denver. All right. Yeah, I never heard of SM Energy before.
So then, to your point there, would you consider that a missed opportunity and wait for a pullback since it's already done such a great run there?
Believe it or not, what I'm waiting for is people to go crazy about oil again.
Mm-hmm.
My thesis, at least with this, is oil is going to spike up because of all the reopening, especially that news about that new COVID pill coming out. That could be a game changer.
Mm-hmm.
I hadn't heard about that. Tell us a little bit more about that COVID pill, Milt.
I think it's Merck. It's a pill that reduce. It's sort of like it's a treatment for COVID, and it's also like the shot too. So it's like a combo together, and it reduced death from COVID, basically.
Okay. Yeah.
And you look at Merck, you'll see how it. Yeah.
Yeah. I'm checking it now.
Mm-hmm.
That's crazy. Nah, I hadn't even heard of that. Yeah.
And then you look at mRNA, you'll see that it got slapped big time, and I was.
In
thinking,
response to this.
Yes.
Oh wow. Oh.
I was thinking about it, but I'm not that brave.
Oh, what, to step in?
Yes, because it's still. I mean, people are still gonna buy that shot, and this is something that hadn't been approved yet. But woo, you have to be really brave to get in that.
Yeah. Now, so here's something. Let's do this. Let's go over here. Oh, I'm clicking on my thing. Acting like it's gonna work on my computer. It's on my phone. So when you see something like this huge, and particularly, so it's probably more for you, Milt, just in terms of you see that move down like that, I immediately just tells me go look at the options to see if you can make something on that increased volatility. Because if a move that big, the volatility is going to be higher. So on that, is there an opportunity, say, to say either effectively like a buy right? So if you did a spread, so if you said say a 39 and then add a leg, let's see, it was at 30, so that's a 330, and say maybe sell a 380 against it. You know what I mean? You know, so let's just take that one contract. Or, you know, you could do that in order to get some of that increased volatility. Or another thing is sell a spread, sell a put spread, you know, to the downside, just to be able to look for that volatility to pull back in. Because if this goes sideways to up, then that volatility is probably going to come out of that, and you'll make something on that volatility contraction. So I don't know if you've ever played those before like that or not. No.
Normally when I do options, I'm doing the insurance, but
Okay.
I have done a few spreads and they always seem to work. The spreads work. Buying straight calls or puts have always failed me, but spreads have been really good to me.
Yes. Yeah, and actually on that course that I sent you all, that's all that they swear by defined risk trades, meaning spreads. They swear by spreads. They, you know, now they, you know, some of the more advanced traders on that they use that, but basically that family that came up, or that, I won't say the family, but that company that creates that content takes the trade. Some of the more advanced traders, they may do single-sided, but most of the time they're doing some kind of spread related options there. And, you know, defining that risk on those trades, you know, makes a lot of difference. So I've played some of these volatility increases. So if I see something like this, you know, that's what I do. I go look and see, hey, especially if a stock I like. And so if I wanted to be in this, what I would say do is I could sell that 320, and then buy that 300 back. So like here, I'll sell this 320 and then add the 300. So that'll be a 10% spread. So let's just say one contract, make it easy, one contract. So that'd be 770 collecting on the 772 on the spread. And so if volatility pulls back in, I can turn around and cover that for the difference. So let's say I sold this at 772. So for the rest of people, it's when you sell, when you sell an option, you collect premium, right? But what you can do is, as the option moves closer to its expiration point, what happens is if this number goes down, it's almost like it's in reverse. So let me show something here. All right, so let's say here. So it's really the opposite of what we do. So like, say for instance, we bought a stock at say 100, right? And then it goes up to say 125, right? So we just gonna so that'd be the difference of, you know, $25, right? In terms of, and this is, you know, a long example, right? So if we're going long on a stock, but the buy, you know, sell, and then this will be the difference, right? So you make $25, all right? If you go short, it's just the thing and the opposite. So the example that I have on the left, say if it goes 772, you know, to sell, right? And then let's just say this goes to $6, right? And I buy it back, then the difference is the $1.72 that I keep, right? So if volatility on this particular option pulls back in, and, you know, just making the $6 up for just to say for this discussion, but if it pulls back in, if I cover at $6, then I can make $1.72 on that. And what that is, since this is an option, it's really times 100. So that'll be just move the decimal place. So I can make $172 on that if this drops to 6 and I cover. And the reason for that is, again, if I believe that the volatility will come in, because what happens is on options, and so how do I know that this is volatility? Because you had an extreme move. So if we go in again and measure from here, this is a 1-day move of 24%, right? So and what volatility is that it's not stable, so it's kind of anti-stable. And with this being a 24% move in 1 day, that's in much increased volatility. And when volatility is high, the price of the option goes up. So what I'm saying is, it's almost like trying to give a shopping analogy. Let's say there's a storm coming in and everybody runs to the store and they're buying all the milk and the bread. Then if the grocery stores, if they were price gouging, what they can do is increase the price of the milk and the bread because there's a huge demand because of the storm. In this case, this is like a storm that came in Moderna, and as a result of it, the price of the options increased, right? But you can say, okay, now say within the next 4 to 5 days, if the price kind of stabilizes, what happens is the volatility is going to go down. When volatility decreases in the option, it doesn't matter if the stock, if it just goes sideways. So let's just say for the next 4 days, it trades in a range from say 341 to say 348, $7 range, right? If it does that, I can guarantee you that this option price is going to decrease because it's getting back to some sense of normalcy. Therefore, the volatility is going to decrease. When volatility decreases, the price of the option is going to go down. And therefore, you can just make money in this just because you're looking for volatility, what they call it, a volatility crush. So I don't know if that was helpful or not, but that's just one thing to keep in mind when you see these options. And again, if you want to understand more about this option stuff, go to this course here. It's free. All you gotta do is sign up, join their site, sign up. But it's a free course, and it's really good to get you oriented toward options if you choose to. And if you say, hey, that's way too much, I don't want to get into all that, that's fine as well. But if you do, it's here. And I'll put this link in the text, or in the chat, should I say. I hope I didn't lose you all there with that. Let's see. Stick this in the chat. Go to everybody. All right. Any other things before any other parting things we want to talk about? Again, if you get a chance, sign up for the Trade Champs. It's $100 a day if you win the contest. A couple people have won. So pick your stocks. Pick your crypto on the weekend, stocks during the week. And then again, let me know if you sign up for it. May get you a bonus or
Are you gonna send us the link?
Oh yeah. Sorry about that. No. Put it in right now. And does everybody know how to get to their chat links within Zoom? Yes, no, maybe. If not, I can text it.
Yeah, I do.
Okay. How about the rest of you? Y'all know how to get to these links in Zoom within the chat?
Yes.
Okay, cool. All right. Any other things before we leave this morning?
One other thing, Mike, before you sign off, which we can have for a later conversation, but like thinking about those oil companies or whatnot. So for example, I do Chevron as my longer term, especially because of the dividends. I play with Marathon as a short trade because he's got pretty good moves. And I hadn't thought about the SM. But comparing the SM to Chevron, for example, the dividend is higher on the Chevron. Do you guys consider dividends on any of your stocks and planning and all that other good stuff?
Yeah. Yeah, Brent.
Because I like the move on SM was a pretty good move. So I guess I debate between the two,
ticker? What's the
right?
Chevron ticker?
CVX, yeah.
Thanks. I don't play dividends as much as I used to play them more, but I kind of got away from them. So I really don't have an answer on the dividend thing. I don't know if anybody else, if they play dividends. If so, chime in.
I tend to leave them alone because they mess with my options. So believe it or not, I don't like dividend stocks.
Really?
Really.
So Milk, it's a good point. How much do you play options in comparison to stock only? What's your ratio?
It's actually 1-to-1. Every stock I own, I have an option on it, one way or the other.
So you write cover calls on everything you own?
Yes.
Okay.
And secure puts on some of them.
Okay. Got it.
Funny that you should mention Apple. The last time we met, I'm going, how dare he talk about buying Apple? I love that stock. That is
I
the
like
best
Apple. It's
option.
just that I'm not disciplined enough to just keep buying it and leave it alone. Well, I take that back. I am in one of my accounts where I just buy it and just don't mess with it. Whereas in another account, I've traded in and out of it to my own detriment. So, but I'm sorry. Go ahead. You were saying.
Yeah, this stock I have covered every way you can think of. I have long-term options on it. I have covered on it. I have secure puts on it. This thing just makes me money because it's, no matter what, it is the number one company in the world. So there's a lot of money in there. So it doesn't do really big moves. The only thing I hate is it does a dividend. Because those are always dangerous when you're doing options. But this does, it moves so slow. So no matter what, I got time decay on my side. So I always make money on my options for this.
So for those, what a covered call is you own 100 shares of the stock. For every 100 shares of the stock you own, then you sell a call against it. And so let's just say you had 100 shares of Apple, right? You got 100 shares of Apple and you say, you know what? I'm just holding it. I'm going to be a long-term holder and I'm going to just hold it. But what you can do with the covered call is you can sell a higher covered call than what the price of the stock is. And you have different strike prices and times. What it allows you to do is basically almost like rent your stock out and gain an extra percentage on it as you're holding it. Because if you're going to hold it anyway, it's just sitting in your account doing nothing. So it's a way to kind of boost your returns. And over time, it's a really good way to do it. Now, one thing, so I signed up for this course. Not a course, I'm sorry, but a website to help me with my covered call stuff recently. And in kind of doing some research on that, I came across this one thing. It's called BXM. So I didn't even know this existed, but this is an ETF to where this is what they do. They write, it's called Buy Right Monthly. So they do covered calls monthly, and it's an ETF index. And so if you don't want to get into dealing with the options directly, but you want the benefit of having it, this is a ETF that does it, and you can just buy it like a stock. But it has the mechanics of doing what we were just discussing in terms of buying 100 shares of stock and then selling calls against it. Now, so here on the right, I'll just show you an example. So let's say, for instance, so Apple today. So Apple is trading at So Apple is trading at, let me go here. So 142.65. So if you bought 100 shares, it'll be 14,000, $65, 14,000 and some change, right? once you buy that, then what you can do is you can go down here and let's say so all options have a date. So they expire basically on this date that's listed. So the one I'm showing is a November 21. And then on here, this price in the middle, the 80, the 90, 95, that's the strike price. So I'm gonna go down and I'm gonna say, hey, I'll sell a 150. So basically it's the 140, 145, 150. So on a 150 here, what I can do is say I want to sell a 150. So let me go here. So I'll say I want to sell a 150 Apple here. So what I'm doing is if I have 100 shares already, I can then sell a call at the 150 strike that's going to expire in November, on the 21st of November. And it's the strike price is 150 and I'll collect $2.41. So what it is that as long as, and so let me say review that. So you can look here and you can see the break even. So my break even on that stock would be 152.41. My max profit would be, $2.41, right? So basically what I'm saying is I'm using my shares as collateral in order to sell an option. Now, when you sell an option, what are you on the hook for? If this stock goes above $150, then by the whatever the November 21st, if that stock is November 19th, if that stock is above $150, it can be just above by 1 cent. What it would do is then you have to sell your stock at $150 and then they'll transfer the money to you, but then you won't own the stock anymore. So that's the trade-off for being able to sell this option. But you still collect that premium of $241 or $2.41, because they're always quoted in the price of the shares. So that's what a covered call is. It's covered by the 100 shares of stock that you own. But again, if you don't want to go through all those mechanics, you can just go here and say, hey, I like that strategy, but I don't want to do it directly. And I can just buy this BXM. But this BXM won't be just on Apple. It'll be on whatever shares that they put in this portfolio. And it's managed by some company. So. Milt, were you going to say something?
No, I think you covered just about everything about that. But one thing I want to talk to Brenda about, do you do drips with your long-term stocks?
I'm sorry, I was playing with my dog. What was that?
Do you reinvest the dividend in your long-term?
Yeah. Yep. It's something my dad had done, but he was real conservative. So really, he only did, he had just a couple conservative things, energy stocks, and that was all he did. And so with my Chevron, I got in on that when it was real low before. And I was like, okay, energy, like you were saying, it's definitely going to go up with the reopening. And so I did Chevron for my longer term. And like I said, I play with Morrow because he has good bounces that I trade against. And the Chevron, like you were saying, I just roll it in. I was just debating on whether or not to buy more of the Chevron with the expected everything is going to be well and good, or like you said, I liked your SM, so maybe I'll play with that one.
Yeah, one thing, when you have a stock like Chevron, that is a good stock to write a covered call on there. And one thing you have to understand about that, you can limit your risk. Of course, you won't get a lot of money from it, but it's still money. So if you have enough shares, you can do way out of the money covered calls, and you probably maybe get $50 less than that even. And the reason I do mine weekly is because I love that time decay. So, and also it's less stressful to me. But you can do monthly and maybe make $50 a month interest on that. And I won't say it's 100% safe, but it's fairly safe. because if they do take your stock away, if you're in a account that is like a IRA or something like that, where or a Roth where you don't have to worry about taxes, then just buy it back.
So y'all are just gonna make me go and learn about these little option things. I was trying to save my brain space, but I see you're pushing me to go ahead and take those courses.
Well, I
Get
mean,
that free money.
it's just another tool in the toolbox.
Yeah, can't avoid free money, right?
Right. Oh, I just ran my dyslexia is kicking in. CVX. Let's see if there are any in here. So this is this little cover call site I signed up for. So here, let's take a look at Chevron. So like Milt was saying, so you could do a cover call here. So like if you had a strike of 102, what is trading at 104? So let's go higher than that. So it's out of the money. So you could sell a 105, collect anywhere between let's just say, take the difference on that. Let's just say $1.20, make the math easy. $1.20 on that. You can make in how many days is October 8th? It's like 7 days. You know, you can make 1% on. So, or whatever that, yeah.
To me, that's a tad too aggressive.
So you'll go out a little bit more, Milk?
No, what I would do is the price. I would not be that close to the extra price.
Yeah, that's what, okay. So what you do at 106 or even higher?
Well, I don't know how this stock moves, so I really can't say. But normally I would do something that I know it's not going to do in a week.
Oh, okay. So you okay. I see what you're saying. So like, for instance, so one thing I think I mentioned this before.
If you just go to Yahoo, that tend to be the best way I look at options there.
Yeah, I go here to FinViz. I just want to see what the ATR is on that.
Okay, I see. Yeah, that's a smart move there.
Yeah.
Duh. Why don't I think of doing something like that?
Yeah, so
that's why I like coming on this show with you, because you have great ideas.
Yeah, so it's the 222. So what FinViz is just a financial site. You go in, you put the ticker in, and they have a lot of statistics here. So I know I can easily find the average true range. And average true range is just basically tells you what's the expected move in this stock on a day. That's really all it means. And so this is a $2.22. So if you say for that, what that means is that on any day I can expect Chevron to move $2.22 either up or down, and that's probably most of what it's going to do in a single day. Now, as we could see in that Moderna, you know, that and actually this will help kind of illustrate the point on that. So let's just go back to Moderna real quick. So when we see the expected move on Moderna, their ATR was 25, whereas this thing dropped from 170, some 379 to down to 324. So it's about $50. So it was twice the ATR. So since it was twice the ATR, that's where the increase in the volatility is going to come. But in doing that, kind of going back to what Milt was saying on the options chain here. So if we say a 222, where are we trading at? So we're trading at 104, 222, that's sort of be 655. So let's just say, just for even numbers, say we go out to a 107 or a 110. So you can go out to a 110 here, collect $1.78 to $1.85, somewhere around there. But let's just take the low end, $1.78, and you're looking at a premium of, what is that? Say if it returned flat, like a 1.7 premium. Is that? Yeah. 1.7 on the premium there. And that's percentage wise. You're talking, what's November 19th? I don't know how many days it is from now. So what's this, the first? So you probably talking 45 days. So in 45 days, you make a 1.7% if it just goes sideways. If the stock happens to run and get to 110 and they call you away at 110, you actually make 7%. And so if you were to annualize 7% over 45 days, so you say 365 days, divided by 45. So that'd be 8 times. So it'd be 8 times, 7.1. So the annualized percent would be 57%, right? If you were to, get that. But if at a minimum, even if it didn't, if you got the 1.7%, if it just stayed flat, and that's just, for effectively just renting out your stock for that possibility. And what you can think of this almost, Brent, as a dividend, like you collect dividends. This is a way to collect premium that can be thought of as a dividend as well, and it lowers your cost basis on a stock, particularly if you're going to reinvest what you gain and just buy more shares with what you earn. So no, that, we may have to spend some time on that if you all want to get into this. But I found this tool recently, and they got like a 2-week trial, so I signed up for it. So remember, I'll just show you all this real quick. So I had a Fubo shares. So I bought some Fubo here, and I sold option against it, and I kind of rode it one time. So just playing with that. But this is a pretty good site to get ideas, and you can create a watch list. So for different stocks that you want to follow, what they'll do they'll come up with the different strikes for the different instruments that you put in, tell you what they are, and then they'll do the computation for you, tell you what the open interest is, if it returned flat, what your percentage would be, if it got called away, what your percentage would be. So the return if flat, smaller numbers here are just non-annualized, and then the annualized number if they're called away. So, but it's a pretty good site. I'm just really getting into this cover calls. So I'm really looking at it for a income strategy. Because at some point I hope to retire and be able to take some of the money that I've gained and just use it as income to live off of. So, all right. So hope that helps, guys. Any other comments before we jump off?
Yeah, real quick. This is me, Mike. As you can see, I'm like in and out and doing this. For me, this is my thought process. If I can't spend the time to really focus, right now I feel I got too many irons in the fire, but I'm listening and I'm learning a lot. But right now I just can't jump in right now unless I can spend the time. I just want to kind of share that little information. Yeah.
What I would say, Kurt, buy an index fund.
Mm-hmm.
Like a VOO. So VOO is a Vanguard S&P 500 fund. Mm-hmm. You can buy that. Vanguard is known for having cheap fees. They don't charge you a lot of fees where some of the other mutual fund companies do. The S&P 500 is just a broad market index, and you just say, hey, I want to do what the market does.
Okay.
Just buy that, invest in it, regularly. So let's just say if you say, hey, I got $100, I'm gonna put in it every month. Mm-hmm. I'll buy it, and it's just gonna get debited from your account. They'll buy the shares, and then you turn on your dividends to be reinvested. Mm-hmm. And if you don't have the time, this is probably the best thing to do.
Okay.
That would be my suggestion, and others can chime in on that.
Okay, that's good to know. Okay, that's fair.
That, or he could just do some stable companies that ain't going nowhere, like Milt mentioned, Apple or any of those other kind of stable guys. So when everything crashed and burned, I kind of bought a lot of those guys that you knew weren't going to go anywhere, and they're gonna, even if stuff goes down, eventually they're gonna pop back up. So if you're not looking at it, it's no harm lost.
Yeah, to that point, I would say so in our discussion the other week when we were showing the like rule of 72 stuff.
Mm-hmm. Mm-hmm. Mm-hmm.
I'm trying. I don't know why my phone's going to jack up now, but I came up with a long-term kind of holdings, and so let's see. Get this out. Let me bring it back up. So here's my long-term portfolio, kind of to Brenda's point. So, let's see. So Apple, American Tower, Chewy, Costco, Google, Home Depot, MasterCard, Nike, Shopify, Square, Team, Unity, UPS. So, you can assemble a long-term portfolio of good companies and just, buy them regularly and go to sleep.
Okay.
Yeah. So now this is a little bit more work versus just buying VOO or something equivalent to a VOO. Right. But either one will work.
Okay.
Yeah.
Yeah, and one last thing to that is most of these new trading platforms, they let you buy a partial share of stuff. So what you could do is just every week, every month, whatever best for you, just dollar cost average into some of these great names like Google. Put $50 a month in that, then next month put $50 a month in Apple or something like that. And probably about 10 years from now, you would be very surprised at how much money you have made doing something like that.
Right.
Yeah, I definitely agree. But the key is to invest regularly and for the long term. So just set it and forget it. For me, I may just do what they call recurring investments. And you just set them up and they just pull out, either weekly, monthly, or whatever, and just again, just set it and forget about it, and check it periodically. But like Milt said, over the years, you'll really be surprised.
Okay. Appreciate that.
Absolutely. Good. Well, thank you all as always. Appreciate the participation and everything. So I'll try to get this recording up as well as last week. So I'm a little tardy on that, up on the site, and you all can watch the replays if necessary. Right.
All good.
Y'all have a great weekend, and we'll do it again.